Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, March 8th, 2022. It is 12:40 p.m. Eastern Time as I'm starting the video, and wanted to get some things that I'm watching out today. I spent the bulk of this morning working on and getting out that video with the long-term targets and those charts to you, as well as some notes on there. Same thing, got to take out the recent lows. And then there were some other things I wanted to get at, but that video was too long, so I'm going to go over those now, and that's going to be gold, crude oil, the markets, what's going on today, and again, just kind of tie in just something I've been saying, and it just bears repeating that volatility is the norm when you are when the market is in correction mode and or bear market mode, referring to the S&P, which officially has entered correction mode, and the NASDAQ 100, which has officially entered again, according to the standard definition of a bear market, a drop of 20% or more. So with that, as I said, comes volatility. And so today I noticed, I tell you guys, or told you, in the past that, go down to one of my shorter term swing trading charts as a 5-minute charts. And so I noticed, reversal today. I was scouring for news. There was none. And it wasn't just a reversal. Remember, you're going to get volatility. I turn on the volume bars, and I could see there was a increased volume today. And anyway, I turned on Bubble TV real quick and saw that they had news released. It was an unofficial report, some news agency that I'd never heard of, saying that Ukraine made an official statement that they've decided not to request inclusion into NATO, and so that sent the market rallying. So let me just say this. First of all, and again, this is all things I've said, bears repeating. You're going to get the headlines are going to dictate a lot of things right now, including the trades we're in. I told you, for the most part, I'm shying away from the trades that are almost exclusively driven by headlines with between what's going on in Russia and Ukraine, i.e. crude oil, wheat, palladium, things that either Russia or Ukraine going offline or full or partially offline has a big impact on. Then, of course, the U.S. markets, everything's interrelated, as I told you before. U.S. hedge funds, U.S. pension plans have a stake in Russian companies, Russian debt. Airlines can't fly over Russian airspace. Travel's going to go down. Surging crude prices affect airlines. So everything, almost everything, is related either directly or indirectly what's going on over there. But with that, you're going to have volatility, and that's what I wanted to talk about today. So far, this is ES. This is a 5-minute chart. Pretty healthy reversal, about almost 2.4% off the lows today. Again, on increasing volume, and what I want to go over is levels where it's going to make a difference or not make a difference if we rally again. I've talked about how in a downtrend, short the rips into resistance. So I'm going to go over resistance levels today, and just again, kind of bears repeating where I begin to differentiate a counter trend bounce that is a potential shorting opportunity, be it for active traders wanting to game the quick zigs and zags, or swing or trend traders looking to layer in or add to, scale into positions or in or out, whether it's longs or shorts. I'm going to show you key technical levels. And remember, when I show you levels that are resistance, that someone who is bearish might want to short into, likewise, for those bullish, might look for a breakout above that resistance level. So I always say, I'll give you my thoughts where I think something's going, and I do my best to share to what extent my convictions are. In other words, if they're not very strong, here's my analysis. Hey, I'm not taking this trade, or I don't have a lot in it because of that. But this is what I think might happen. Or if I feel strong, I'm going to continue to. I'll let you know, and I'll reiterate my thoughts. So right now, again, this is noise. This is all I view it as noise within a larger downtrend. And here's resistance levels for you ES traders. We're on that 5-minute chart. Just a week of price action or price history. Right here, about where we are, about 42.50, I have a resistance zone. So we're at that now. There's also the potential for negative divergence should we turn down. See, this is the PPO, but the PPO line, that orange line, will move faster than the white line. White line's down here. So you could cross down and in this 5-minute chart put in a divergent high, just like you had right here. You had positive divergence on the PPO. So again, it's a great swing trading, short-term trading time frame for active traders. You can couple it with the 1 minute charts, 10-minute charts, 15-minute charts. The shorter term charts, the smaller the trades. Here was a little divergent low, a little trend line break. There was a buy signal 1, buy signal 2, breakout back test. So, these are rallies that are comparable to this. You could trade for a few percentage points and just kind of swing these divergent highs. Right there was divergence on the PPO. And so that's what happened. And again, now just to speak fundamentally for a second, because when I talk charts, it's technicals. When I talk about fundamentals, it's what may impact what's going on in Russia, Ukraine, oil, the Fed. So if Russia and Ukraine just dropped arms and started hugging each other right now and said, "Oh, Russia said, oh, we're sorry, we're going to leave," Ukraine went back to doing what they do, then what happens there is you turn back to where we were. Remember, don't forget the Nasdaq 100 and the sell signals I started giving back started back in, what was it, October or November? I'm drawing a blank. I know the S&P took a little longer to follow, but the market was in correction way long before Russia invaded, even before they really started building up, troops to the level of concern. So, what happened then is, as I always say, almost always, in most instances, the technicals will first develop a bullish or bearish development that's going to signal a trend reversal, a rally, a correction, and then quite often there'll be a fundamental catalyst or a layering of catalysts. The fundamentals gradually change and mesh with the chart. So what I want to say is what we're facing, even if Russia laid down arms today, backed out of Ukraine, and said, "Hey, we're sorry, our bad." You then turn the focus now back to Powell, who, as I told you before, was on bended knee, praying and hoping lately inflation would abate and he could keep his easy money, free money spigot flowing. If that did happen, if things happen to resolve over there, yes, the market's reacting as like that's just going to end this whole correction. We're going to go to new highs. Then it's not. We turn back. Yeah, there'll be an abatement in oil prices. No doubt they'll come down. But it is not the rate of inflation is so fast and so lagging. What a lot of folks don't realize is, may or may not, one of the biggest components of GDP is housing, and it's not house prices. They don't factor in what you or I pay. They have the owner equivalent rent, which says if you, they have rentals, of course, apartment rentals and everything else, home rentals, and then for home property values, for those that own a home, they have owner equivalent rent, which says if you own a home or to rent a home comparable to yours in that same market, what would you pay in rent? Now the thing about it is rentals are usually on annual renewing lease terms or rent terms, and so there is such a lag there, and so we know with all but absolute certainty right now that is going to continue to put upward pressure, because a lot of the surge in real estate prices over the last year in rental increases have not yet been factored in. So we know inflation is here to stay, even if there's an abatement in oil, and they even back that out. That's why you have the core CPI and then the which backs out the volatile food and energy sector. We know crude prices are volatile, but the trend is clearly up. All right, so all I'm trying to say is, yeah, we can still drop quite a bit from the surge we had since Russia invaded, and you still have surging energy prices. They've been steadily going up pretty much since Biden took office, and there's no anything remotely close that trend is there's any end in sight. Like I said, there will be demand destruction sooner or later. You get up towards, once you cross above $100 a barrel and you tick towards that, last time around it took, the magic number was 150 a barrel back in 2008, but the markets had already long since peaked that previous November in 2007. So, all right, what I'm going to do now is, what I wanted to clarify is, Ukraine can go away because it wasn't an issue when this market topped. It didn't factor in my price targets, which were the same then as they are now, long before Russia invaded. And I still think we're going there. So this is that analogy I gave you before. For you boaters, I'm a boater, and if I'm offshore, I'm going to turn the squelch down on my VHF radio. You're supposed to monitor channel 16 when you're out boating, fishing for emergencies or any distress calls or anything else important going on. And so offshore, you turn that squelch button down so you can pick up signals from farther away. But when you get inshore, especially to a crowded area like I live in, you got to turn that squelch up, or you're going to have that radio crackling, picking up signals all over the place that aren't really relevant to where you're at. And that's the stock market right now. With volatility high, you got to take that squelch button and turn it down if you're a long-term trader investor, and tune out the noise. This is what I call noise. It looks like a big pop there, and on this time frame it is, but that's again 1 week chart. 5 minute candles, but now we go out to a 3 month chart. Here's what we're going to do the rest of this video. We're going to go over these levels to watch on the markets, and then I'm going to do updates on gold, oil, silver, and lumber, which triggered a short entry today. That setup I gave you yesterday is triggered. Let me turn off the volume bars here and show you that really there's nothing that right now that's changed technically. It's just a little blip in the market on rumors, unsubstantiated news, which again, even if it's substantiated, it's not going to change anything fundamentally much longer term. Near term, it could cause a rally. And here's a downtrend line comparable to the one I gave you on QQQ and NQ, which we could hit. And that's where, that gets taken out. It's not a be-all, end-all where all of a sudden I flip from bearish to bullish and cover all my shorts and go long. It's more of an incremental thing. I'll illustrate that in a second here on the daily charts. I'll show you now. Incrementally is, like this. This is the zone where, start to maybe stop adding and up here start considering scaling out of stopping out or scaling out of short positions. But unless that happens, any bounce back right now is still being viewed as an objective short entry in my opinion, and I still believe we're going lower at this point in time. And if it changes, I'll let you know, and I have no problem pulling a 180 because it's critical in investing and trading. You don't get married to your views if things change that tell you should change, that maybe you were wrong, or maybe, hey, it looked great, it was a perfect setup at the time, but that the charts no longer indicate that you're going from point A to point B. Now they say you're probably going from point A to point C, and that's where you need to adapt as a trader. And again, with what I'm looking at here for trend and investing, trend trading or longer term swing trading, it's not a hard line. It's more of a series of events, technical events, breakouts above resistance, key Fibonacci retracement levels, moving averages, and everything else I've covered ad nauseum lately. So that's it. Oh, all right. Sorry, guys. Level, first big level. First resistance coming up on the ES, the S&P 500 futures. 42. That's about 42.80. It says 42.78.64 right there. There is no 42.78.64 in futures. They trade in quarter point increments. Yes. So just these lines for whatever reason they don't snap. But so we'll just round that up to 42.80, give or take 42.78, and then after that, I'll let you know if we get there. But you can see the bigger levels up here around 4420 or 4400 or so, right about there. But let me move on to the ones I'm more actively trading, and that would be NQ. NQ, this is a 5-minute chart. There's a rip. We had divergence building again, and we were above the recent the previous reaction low, that is right there, slightly above it. Oh, for all intents and purposes, that was an equal low there, and then you had the positive or bullish divergence. So again, it was not a completely random thing. The news and the technicals, like I say, will often coincide. A little wedge type pattern too you can make of it there. But there's resistance. We're at it right now, a hair above it. I have it about 13,544. Unless this is a momentum fueled overshoot, which it could be, and if it does, that's where we go back down to 13,381-ish. Otherwise, this is our next resistance. It's a pretty decent one, 13,744. I'm just rounding off, and then there's some minor levels between, but in here, but about 13,957. Okay, so those are. And I think this one will most likely cap anything. Actually, what I think is, I think they'll probably fade this soon. People realize, hey, a lot of people are trapped in this market or dying to get out on these bounces. So I'd put equal odds, coin toss odds, whether this is a momentum fueled overshoot, we come back down. Now, ultimately, down a lot more. I'm just talking real quick. buyers will step in probably by the first tag of 13,380-ish, and then ultimately break it. So those are levels you want to watch. And again, if they, so you want to see a break of that, and if we break that level with conviction, 13,380, then we'll likely run at the lows. And of course, you break out the take out the lows, and you're going down more. So that's it. This is kind of my range today, right there, uppermost bounce target. And then now that's a 5-minute chart. I always say I put a higher weighting on the longer term charts. So I go out to an hourly chart. It carries the resistance levels I see here carry a higher weighting than the 5-minute chart, especially with swing and trend trading. If I go out to a daily chart, those levels will supersede the levels on the 60-minute chart and down the road. So weekly chart is still my primary go-to swing trading chart. And this is a line I gave you recently, and it's held pretty well. I've highlighted objective shorting ops there recently. Most recently that one there. And look, we're well below it now. So as impressive as the rally has been off the lows recently, we are at, you can see right now, I think you can see it. I know the video, especially, I always say this, if it's on a good quality monitor, guys, I record these in 720p, which is the HD. You can have 1080, which is a clearer HD, but look, I play it on my monitors. I have, giant 43 as my main monitor, and then the rest are 24s that flank it, several of those. But even on the 43, scrunched down into one of the quarter windows, it divides into 4 windows that are equal to a 21.5-inch monitor. I can see everything clear in the videos. So what I'm getting at is, if you're watching these on a phone, you're not going to make out these levels. And I know some of you are mobile, and that's all you can do. You're at work, whatever. But on a computer, you should be able to make out the levels or close to it. And if not, just ask me. I'll post a chart in the comment section or tell you levels. All right, so levels are resistance on this 60-minute time frame. I'm just going to read it off, and you can round it off. 13,569. I'm going to skip that next one. There are lines there. I'm just telling you the key ones that are likely to cap any advance. I think this one's important. 13,831.50, so we can round that off to 13,832. And then the downtrend line is a big level to me. So the way it works is, the shallower the resistance levels that we get rejected off of. If this happens now, and that first resistance level we hit and we go down, it shows me this market's just out of gas. If that's all they can mount on what was taken as potentially good news, triggered a little short covering, triggered some long buying. If they get rejected, then that's very bearish. We go up here, it's just run of the mill, what is likely again. So anything above that downtrend line, you might want to stop shorting, and then if we continue up and get over somewhere here, the 200-day moving averages, then you might want to consider scaling out. That's the way I look at it, scaling out of short positions. Until then, I view any rips into resistance as shorting objective. Excuse me, I'm trying to talk fast to get through this video. I realize you can just hit the increase speed button down in the settings. I usually play videos I'm watching at 1.25 to 1.5 times speed just to get through it a little quicker. You can do the same here, so maybe I should slow down my rate of speech. All right, there's the downtrend line also right there, a minor downtrend line. So this would be, again, the first potential stopping point for this bounce. And then really, if we get up there and you don't have any shorts, you've been looking to get in, that would be a great shorting op if we get another test of the trend line. And then, of course, a break of the recent lows is also going to be an objective shorting up. So those are your levels on a 60-minute chart. And for those of you that do not trade futures, I understand that. So we'll look at what is this? This is a 5-minute chart of QQQ, and its comparable resistance is about 330.86, which again, we may have just had a brief momentum fueled overshoot. That's what I call when you have near vertical ascent into a resistance level. The momentum's likely to carry you through it, and so far we're just trading around it. If they pop it, I'm going to move, I'll leave that line. I'm going to move it up. I'm going to move it right where it should be, around these reaction lows. Also catches those reaction lows. 335, and again, these are old levels, so I'm going to adjust them because over time, I always say the charts are dynamic. So is my analysis. Charts change constantly. Roughly ballpark about 339. And let's see that downtrend line there. We're pretty much at a near-term downtrend line as well. So this would be a great place for the bears, the sellers to step in. And if they don't, then again we go out to the 60-minute chart, and there's our 60-minute chart, and there was our not our last, but one of the most recent objective short entries here when we hit that sell signal on the PPO, and we hit the downtrend line, and then we had a couple others recently. Okay, so resistance levels on the 60-minute chart: 334.74. It was this previous reaction low. We broke it there, kind of traded through it a bit, so it's not as important, so to speak, as it used to be. I got one little minor level here. I need to add it real quick. I see, and I zoom in nice and tight, I see some consolidation in this area. Reaction low right there, a candle, and then this reaction low there. So 338.63, and then pretty much the downtrend line, which comes in around that 341 resistance level right there. So those are overhead resistance levels on QQQ that will provide, if we get there, objective shorting levels. And then above that, you may want to take pause, see what's going on the charts. Again, it's not a hard stop level, but it's maybe, hey, let's see if something else is happening, if we're going to be looking at a bigger counter trend rally or not. And I'll let you know if and when we take those levels out. Small cap traders, let's just cut right to the 60-minute chart. Have a resistance zone on RTY, that bigger resistance right there about the 2000 level. I talked on that the other day, that 2000 was resistance on small cap futures. Quite a bit of reactions in there, and that's right what we're to right now. And again, it was, at least on the small caps, not on the NASDAQ 100 futures, but on the small caps, we had that 60-minute divergent low right there, positive divergence. Can't really draw a clean downtrend line. There's not enough reaction, so I'm just going off these resistance levels. If they pop 2000 with conviction, then you have these recent highs right there at about 2070, and then the big, massive, major resistance level about 2100, which again was our, shorting up when we broke that multi-month or year-long trading range right there, and then the golden shorting up when we back tested it there. And so that remains, that's a pivotal resistance level. And again, anything between then and it's noise. We already back tested it once, undercut the recent lows, so it would be preferable for the bearish scenario that we don't do it again, but that's sometimes things play out like that. So we'll see. Right now, again, all I can tell you is that the primary, or the intermediate term trend remains bearish, and as such, till that changes and bounce back to resistance or objective shorting ops. If you are a bull, you don't go long at 2000, you wait for a break above 2000, then you swing up to the next level. Then you, of course, if you break out 2100 with conviction, you can go even longer, add to those longs, I mean by that. And then if you were to whipsaw through it and then fail, that's going to be bearish. But again, that's so much can happen, and I'll get to those if and as each of those developments happen. Right now, again, just wanted to comment on the intraday reversal because it's one of the bigger ones in a while. And again, it's par for the course when volatility is high. It's about a 4.4% bounce. Alrighty, next up. We'll just get lumber out of the way real quick because I mentioned before that broke down. There's this again, that setup was showed to you on a 120-minute chart, meaning every candle's 2 hours. You had this most recent bearish rising wedge, which broke down today, triggering an objective short entry after the divergent high. Targets are 1227.50, unadjusted targets, so about 1126, 1022, and potentially if we get a decent pullback, then we'll may head all the way down here to 1825. Or possibly more. It's trail stops, but remember we're in a bull market in commodities, so that as such you might want to favor. I'll just tell you right now that's sort of the target I'm eyeing, with a minimum target of 126 right there. And of course, then stops are going to be commensurate with whichever level or levels you decide to target. The deeper your targets, larger your stops, wider your stops can be. Okay, next up, gold. And this is one that, during that other video, I had to keep it. It was long as it was, covering the indexes and the targets. I wanted to cover everything else, and I knew I'd do it in a separate video this morning. Guys, I swear I hate this. I usually will tell you in advance if I'm going to reverse a position or whatever. And this is just a tactical, a short-term trade. But earlier today, right before that rip, or gosh, I kid you not, it was right off the highs. I reversed gold and silver and took a short position on crude, primarily as a hedge based on what I saw on the 5-minute charts. I could see the potential for a bounce in the markets. Didn't know it'd be this much or news induced, and figured we had gold and silver resistance, crude as well, and I'm going to go over the charts. So they're pulling back and where they might pull back to, and more so, look, that's active trading stuff. I'm going to hold those now until I think this bounce might have run its course in the market. There's a minor uptrend line, but there's really not a good uptrend line you can draw. What my catalyst was, we had negative divergence in gold at long-term resistance. It was testing the previous multi-year, multi-decade highs right here. And so this is a parabolic run. Parabolic runs are unsustainable. And this is not Bitcoin or AMC or GameStop getting short squeezed. So when I see this is what we call at least a near-term buying climax. And so, if nothing to take away. Now, look, it's not down much. I haven't made much on that so far. It's down. It's dropped about 2% off the highs. And again, somebody asked the other day, hey, any pullback areas? Yeah, I'm going to give you those now because I plan to be back long again. That was a trend position. I had held gold for a while. It was the first time I got out of that core holding, and in my trading account, that is. There's other accounts that not even bother to change anything there. I'm going to ride that pull back out. But pullback targets, pullback levels, likely stopping points. The shallowest one would be, I think, about right here. 2007. This is gold futures GC. I'm going to show you a GLD in a second. 1976 is price support, and then the trend line. So I think we'll probably, again, depending on how much juice the market might have left in it on this bounce, my maximum target at this point in time, where I think would be an objective entry, again, if the charts confirm, would be a pullback to that trend line. There's also some price support down below there, about 1920 something right there as well. Also some levels right there. So there's pretty good support all the way from, at minimum. I mean, if gold only pulls back to this short-term trend line in that 2007 and can power on up, keep going, wow. I mean, I know there's a pretty voracious bid, so I'm only looking, again, I did it twofold, a quick pullback active trade that'll probably be out by the end of the day or no later than the end of the week, and then back in long. It could pull back again a little bit more, and these are buying ops. That's what I'm laying out for you. For those of you that want to get in gold, take advantage of this pullback. And then here, let me show you what I'm talking about on the long-term chart. This is the peak back here in 2020, and you can see that's pretty much almost to the button what we hit today. You put a line there, a horizontal line, or close enough. And so, with the run like this, it would be unusual to see it to just pass go and not collect $200, if that's the right Monopoly reference. Remember the game from a kid. To just pass that level and keep going, especially, it's been strong run since the breakout. And the breakout is, let me just say again, very solid, intact. Still very much longer term bullish on gold, but it could correct. And if it corrects more than what I just showed you, I'll be talking about it as objective re-entry all the way back here. I don't see that right now. Maybe it depends what goes on in the macro picture for a while, what goes on with the dollar and the euro. And then silver, SLV, is almost a similar chart. Silver just punched through that 2383 level there on the weekly chart, but we had resistance, which is a hair above, about 24 is resistance there. But more so, silver is going to follow its big brother gold. And the futures looked similar. I'm going to pull that up for you real quick and show you that, if I can find that chart here. SI, where are you hiding? Got a bunch of charts down here on my taskbar, and that one seems to have disappeared. Let me pull. Oh no, here it is, right there. SI. Same thing. See the big positive divergence? And again, the divergence is not a sell signal, but when you get big divergence like that and you're hitting, especially with gold at resistance, so far it's been a little pullback. And so here's your levels right here. Uptrend line, support number one, and even better support right here about 25,673. So if you want to buy silver, I think that's good. If we take that out, which we could, very well, and still very much be in an uptrend. Here's your primary uptrend line, at least primary on the 60-minute chart right there. Come off that low, which is back here around early February right there. Yeah, early February lows, and you can draw a nice trend line, use a log scaling on your chart. And so that would be my buy zone from here down to this trend line right there. Okay, that's silver. And now crude oil. Okay, crude oil looks like it's been stalling out the last few days to me. I had the big, almost parabolic run up, big thrust up here, kind of looked like a blow off top. And these are the near month future, or these are the May's. Actually right here, the May contract I have up. And so it thrust up today and it made another run at that previous high, but what I was noting is big divergence building, big negative divergence most recently. These other little divergences played out for small pullbacks, but to that trend line I gave you. Remember I gave this trend line recently? And so that's what I was looking for, pull back to the trend line. Now based on this, how steep this divergence is, we have a roughly equal high here. I'm torn right now. I'm going to end the video, and what I'll probably do is I'm torn between covering, because that's all. If the stock market hadn't bounced today, I was going to cover on a pullback to this trend line. But now that we have that negative divergence, that was a big support level right here. You had a big gap. We may undershoot that. We undercut that. I'm sorry. We could go down more. So what I'll do, as soon as I pause or end this video here in a second, I'm just going to put a stop loss order right here, and I'm going to trail it down. If they bounce and take me out, I'll give it a little bit of room. I'll give back a little bit of profits. Otherwise, if we can break that trend line, we're probably going to shoot down here. And we already tested this level once, this support, and we could be where we stopped today. But if we break it, I think we can come down here. And that's, remember, crude's news driven. So I'm going to get off the video here, and I'm going to check the headline, see what's going on there, and is there anything fundamentally that might pop this take a little hot air out of this crude bubble. We all know that Biden's cross-eyed crazy to have crude prices come down. He announced the ban on Russian oil today, but we don't move the needle. We imported, I think it was 8% of our oil from Russia last year, something like that. It's not a big thing, and I think even he knows that a lot of most European countries are either much more dependent or completely dependent on Russian oil. So I don't think he's pushing for or expecting all the other our so-called allies or quasi-allies to follow suit. But anyways, that's what's going on. So there's the levels, and that could lead to a much bigger drop. Let me just look at a 6-month chart while I have you here and see when I go back here, that trend line would be right here now. Yeah, that divergence shows through there, and yeah, if some fundamental catalyst happens, I hear the calls out there. I hear the U.S. One report said that if things continue at the rate that we're at now, and Russian oil goes off the market, we'll go to 200 a barrel. Putin's saying it'll go to 300 a barrel if he, if we quit buying his oil, everyone quits buying his oil. Who knows? I don't know. We'll let the charts be the guide, but I can tell you this is almost a parabolic spike here. And if they, even just have a correction, believe me, oil's not going to 30 a barrel anytime soon. We all know that. But demand destruction, everything else kicks in. We could have a much healthier pullback. So here's where I'm going. If that line breaks, I'm going to say right here would be our first minor support, roughly 103. And then all the way down here, probably about 93, and this uptrend line is probably going to come in around there. So this is a potential swing target for crude. Let's tighten it up. Let's do this. Let's put that trend line right here. That comes in, captures this low from February or December 2nd. That next reaction low around December 20th. And then these two reactions here, February 17th roughly, and February 25th. And that would be, if that is hit, which is certainly very doable, that would be about an 18% pullback in crude. So, to me, to continue not knowing how much more we're going to see the market bounce here, a short on crude is effectively a long hedge against my shorts on the market, because if the market continues to rally, it's going to be good news implied or direct something out of the Middle East. I'm sorry, out of Europe, and that should take a lot of hot air out of crude, and so any drop in crude, any or all of that 18% drop in crude should offset any losses that I have on my equity shorts and allow me to stay in those positions without watching a bunch of gains evaporate on paper. All right, I'm going to wrap it up here. I believe that's everything I wanted to cover. Yep, let's keep it short, and I'll get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.